Hello and welcome to another update video about ADA. Unfortunately, there is just not much to update, so we make it quick, but still wanted to give you your daily ADA update. But we have a bit of a tendency here now to break to the upside, so we're going to take a look at that. Overall, the higher degree wave count, so the bigger picture, still reveals that we rallied in a leading diagonal in a wave 1. That's the primary wave count, yeah. Leading diagonal in a wave 1, that we're coming down in a wave 2. We hit our yellow support area that is relevant for this particular scenario. So price has found support dancing on that 36 cent level, the golden ratio, 61.8 retracement. Price seems to be caught between the important 38.5 cent level that I've called out many times now and that golden ratio. So the market hasn't really made up its mind yet. So it is possible, because we hit the support area, we hit the trend reversal area, that the correction is over. And yes, we could count this as a wave 1-2 setup. So we could say that we peaked here in a wave 1, okay, that we had a wave 2 down here. This is possible, didn't invalidate it, and the wave 1 would be a leading diagonal, and that this is another smaller 1-2 setup within the larger degree wave 3 here. So that could be another 1. This could be a 2, which would be bullish, okay? And we would then rally now. But I need to see a sustained break above 38.5, 38.6 cents, this swing high. I need to see that in a third wave to confirm that at least we are en route. But unfortunately, it is not the clearest of bottoming structures. It's actually moving in a little bit like a trend channel, you could say. So it's not very clear. It's not crystal clear price action. It makes it quite challenging at the moment. To me, it looks still very corrective. Yeah, can you see this price channel? It's just following it at the moment. I might leave them on the chart actually, just to see. So it's just respecting here some kind of a trend channel. That's not necessarily bullish. But of course, if a breakout of the channel to the upside can occur, it would certainly push a bit higher. But it's not really... Yeah, it is not a classical bottom structure, what you want to see, with a clear swing low and then an impulse to the upside, which would make it easy for us, right? But it's not an easy market at the moment. So anyway, a breakout of the channel would at least increase probabilities that we are in this breakout that's sketched here. So I actually need to move that over a little bit here, because honestly, we would first of all... Anyway, I can take the white ones out actually, because I already had the yellow one, 1, 2, 1, 2, and then this would be a 1, 2, 3, 4, 5 in wave 3 and so on. It would move higher. Target for that yellow wave 3, what would be that? What would that be? The 1.618 extension. So here I'm looking at it as a wave 1 to the upside, then an A wave down, overshooting B wave and the C wave. So I take the measurement of the wave 1 here, go to the low of the wave 2. Yeah, and then normally you would say at least the 1.618 extension, which is roughly at 40 cents, but because we have quite a substantial smaller degree 1-2 setup here, it would most likely take us to round about 42, 43 cents, this wave 3 in yellow. So we look at an extension, right? So that's deep bullish count. Unfortunately, at the moment, there's no clear edge here. You don't really, well, we have an edge. We have the support area, trend reversal area. We know that below 33.3 cents, we're going to morph into a different scenario, but it's just not clear if the move up has started yet. Be aware that there is going to be structural resistance around 42 cents. Yeah, maybe just below that here with this X wave high, which is going to be quite important. And then, yeah, this is the bullish count, but then of course we also have the bearish one, short-term bearish, which is something that absolutely I cannot rule out at this stage. When we moved down in a wave W, moved up in the next wave, and we're now coming down in a Y wave, and in the Y wave we have an A wave. This here is a B wave, a bit like Bitcoin or Ethereum, and then we come down in the C wave. And this B wave could also push a bit higher. So the problem in the current structure is, because we have an incomplete looking downward structure, that even if we push higher here, as long as I don't get all the 5 waves filled in, I will not be able to confirm that we've bottomed, because this could just be a 3-wave move. Yeah, it could just be an extended correction, like a B wave, and we come down then. So we just need to be ready for unexpected moves, need to be ready for movements, corrections where we don't expect them necessarily, pullbacks, sudden rallies, so it's all a bit messy. A lot of overlapping price action at the moment, which still would make me favor another move down. But note that this move down doesn't necessarily need to occur right now. So I can give you a very clear message here. So I need to see all 5 waves filled in, 1, 2, 3, 4, 5, to confirm that ADA has formed a low. And then what it needs to show us is an ABC correction, ABC, which would be the next tradable trend reversal area like this one here, yeah, where also price seems to be turning around, but we need to see if it's only temporary or if it's an actual breakout. So if I was to align this count with Bitcoin, it would indicate, yeah, we can push a bit higher, maybe in a bit of a B wave, but then should still make another low, okay? And then the depth of the new low will decide in which pattern are we actually. You know, there's two bullish setups that we have overall on this chart. One is this 1-2 setup, and one is where this is just an overshooting B wave. We come down in a deeper C, which would form a larger wave 2 before we rally in a third wave. Yeah, okay, that's my update about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.